Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the low time frame bearish scenario, where we are looking for a move to the downside in a WXY, where the most common target for wave Y is between the 1 and the 1.236, taken from the high to the low of W to the high of wave X. And as you can see, it is in nice confluence with the support area that we have between 27.8k and 28.2k. What you see on the chart, the pink line, is a piece of price action from history, also called a bars pattern, that you can then copy on top of the current price action. And price, it doesn't repeat, but it does rhyme. And actually, till the moment this low was made over here, the bars pattern was very nicely respected. However, now price is moving sideways, while the bars pattern moved impulsively to the downside, which gives a more bullish indication over here. Also previously, when talking about the blue support area over here, the point of control of this whole range over here used to be inside of this blue support area, but as you can see, it now switched to the upside and is sitting at 30.3k. So there's now a gap of volume over here. Of course, this can still act as important support, and if price would eventually move towards the downside to around 28k and price is ranging here for a little bit, the point of control might again change to this area. But I do think this is important to at least realize, because when we talk about trading volume profiles, then eventually you could look for a move to the downside, and then the value area low is an important target at 27k. If we look at the lower time frame bullish scenario, we are expecting a move towards the upside. So we have a finished structure over here to the downside with the wick, and now we are going to be looking for a three-wave structure to the upside, either to the white resistance area or the blue resistance area over here. The white resistance area is between 30.5k and 30.7k, and the blue resistance area is between 31.1k and 31.3k. After a potential wave B, we are then looking for a wave C to the downside in an ABC zigzag, which then is a 5-3-5 wave move, where for wave C, two important target areas are on the chart over here. One has already been mentioned, which is around 28k, but the other one over here is around 29k, as it is between 28.8k and 29.1k. On the micro scenarios, very locally, price has been ranging for a while as well. And what we've been looking for is this bullish scenario to the upside, where over here we then have a three-wave structure in a wave W, looking for a wave X for then eventually a wave Y to the upside. Most common target for wave Y at the moment is between the 1 and the 1.236, taken from the low to the high of W to the current low of wave X over here, sitting between 30.4k and 30.6k, which is in confluence with that wide resistance area, as you can see. The main question is price already ready to move towards the upside for wave Y, or are we going down once more for then continuation to the upside? Now, the most common patterns in a wave Y are a zigzag, a flat, or a triangle. So if we put wave X over here and say wave X is already finished after a zigzag structure over here, a 5-3-5, then you want to see a move to the upside. Now over here, wave W is a zigzag structure in a nice clear ABC move, meaning that wave Y has a higher probability of becoming a flat or a triangle. Now if we think about a double zigzag, then it is a zigzag, corrective X, and another zigzag to the upside, but then this has to be a 5-3 and then a 5-wave move to the upside, which at the moment doesn't really fit as nicely. So potentially either this wave X is maybe not yet in and we might go down once more, or we have to think about potentially a triangle or a flat for a wave Y, but a bit more price action would be good to see. So this at least is important to realize, that price can first move to the downside before moving up in this bullish scenario, and there is no problem doing so. The invalidation of this scenario, or well, invalidation at the moment would be 29.5k. But if we think about a flat scenario, then you're thinking about a WX, and if this is already a wave Y, then the flat can be an A, B, C. So still the invalidation would hold in this particular scenario, and preferably this low is going to hold anyway for this more bullish scenario towards the upside. In the more bearish scenario, we're going to continue towards the downside. So in this scenario, we then have a three-wave correction which is finished, and we are now looking for an impulsive structure to the downside. Over here on the chart, you can then see a double 1-2, meaning a wave 1 2, and then another impulsive wave 1, 2 for then continuation to the downside in a wave 3. But after this second wave 2, you want to see a wave 3 to the downside on high volume and high impulsivity. And what we got is a small little move to the upside and a move up to the downside and a move up again. Not really reminiscent of a wave 3. If we look at the volume actually goes down instead of the volume moving to the upside during this move to the downside over here. You can see very clearly the volume was not supporting an impulsive move to the downside, and that's actually what you want to see. Something that also goes against this scenario is the 886 touch over here. So for a wave 2, the 886 is actually a rare target with the fib taken from the high of this 2 to the low of this 1. The 886 being a rare target is not what you want to see for a wave 2. Most commonly, if price hits an 886, it's part of a wave B or a wave X if we talk about probabilities. And also the fact that price has ranged a long time underneath the 886 is increasing probabilities that price will eventually take this high over here. The invalidation of this scenario would be for price to take the high over here of this wave 2 at 30,129. Trading psychology wise, it can also be nice to see a little bit more upside, of course, either directly or first go down and then move up, to also stop out a couple of people that have been shorting in this range. Because where would you put your shorts if you are shorting in this range? Well, many people will likely put their short stop losses above their highs, and triggering these stop losses, getting them out of their positions before then a move to the downside is something that could be very nice, or a move all the way up, make people very bullish before then a continuation to the downside is something that I would be looking for from a trading psychology point of view. Thinking about CVD over here, we do have the bullish CVD divergences that are building, as you can see, between the higher lows on price, but on the CVD chart we then see lower lows on the CVD lines, as I will show you in a second. And also we have some bearish CVDs over here between the high, lower high on price, higher high on the CVD, which is a bearish CVD divergence. If we then go to the AGGR chart, template can be found in Discord. You can see over here that we have a higher low, or actually higher lows on price, right? But we then have on the blue line here, lower low on the blue line, as well as higher low in price, lower low on yellow. That's a bullish CVD divergence. Market shorts are being absorbed by limit long orders. But locally, you can see that the yellow line also started to show bearish CVD divergence. Lower high on price, higher high on the CVD. Has to be said that the CVD that appears first has the highest probability of playing out. And you can see the bullish CVD divergences were there first, so have a higher probability of playing out. Doesn't mean that the bearish one cannot first play out before a continuation to the upside, because then these bullish CVD divergences, the bigger one over here, will just go to the right and have a connection with the new low that's then going to be made. But that is something we have to wait and see, of course. So probabilities at the moment, probabilities from a Elliott Wave perspective are at the moment towards the upside. Doesn't mean, again, we can go down and then up. What I'm talking about is on the micro, I'd be looking at the moment for a wave wide to the upside based on the probabilities that Elliott Wave is giving us. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.